Boris Johnson's move to suspend Parliament tripped up the pound yesterday. Sterling lost 1% against the dollar. The move is set to heighten the risk of a no-deal Brexit. Well, let's get a sense of how the depreciation of the pounds could affect Nigeria's diaspora remittances inflows. Adim Okwesa, one of the research analysts with Financial Derivatives Company, joins us now. Good afternoon, Adim. Thank you for joining us.
Good afternoon, Chimizu.
Now, Britain is one of Nigeria's leading trade partners and is home to over 200,000 Nigerians, as according to the World Bank. Our diaspora remittance inflows into Nigeria increased by 14% to $25.1 billion in 2018, with the UK accounting for about 16%. So how would sterling's depreciation affect remittance inflows into Nigeria?
Yes, I'll start by saying that remittance inflows into Nigeria have been fairly robust in recent years, and that trend is likely to continue for the next couple of years. Remittances play a very important role in the economy, both on the macro and micro level. I think your question pertains more to the micro aspect of things, so I'll focus more on that. Yes, as you said earlier, the pound has depreciated sharply ever since the June 2016 referendum, and is even likely to depreciate further as the risk of a no-deal Brexit increases. The impact would be lower remittance inflows into Nigeria because the value of the sterling will be eroded. With the UK accounting for 60% of remittance inflows, second to the US, the impact of this cannot be understated. Many Nigerians rely on remittances to meet their basic needs, to finance investments, to pay their bills, and many other things. So this could affect the livelihoods of many Nigerians.
Now, data shows that diaspora remittances are Nigeria's second largest source of foreign exchange. Now, a drop in inflows could have a negative impact on external reserves, the value of the naira, and the country's external balance. Is this a genuine concern, and what can be done to mitigate this?
Yes, indeed, it is a genuine concern. Remittances are a crucial component of the current account, and they have a multiplier effect on consumption and economic growth. What can be done to mitigate this will be to bolster other components of the current account. The other main component of the current account is merchandise trade as well as invisible trade. As we have seen, the government has displayed a strong commitment to diversify the economy, boost agricultural exports. So I think I am confident that we will be able to sustain our trade surplus from 2018. The signing of the Africa Free Trade Agreement and the fact that oil prices are currently lower would only sharpen that commitment. Also, in light of recent policies, the CBN has placed certain items on foreign restriction lists, so we can see that the CBN will do whatever is necessary to preserve the value of the naira. So I wouldn't be overly concerned. Yes, it would have an impact, but I wouldn't be overly concerned about the value of the naira and external reserves.
Okay, let's look at the issue of trade. Now, the UK and Nigeria have a strong trade relationship, with the value of trade between the two countries reaching about $3.7 billion. That was in 2018. Now, Nigeria is also a member of the Commonwealth of Nations. Do you think a weaker pound would have an impact on trade between the two countries? Also, what would be the impact on global and domestic commodities?
Yeah, the benefit of a weaker pound for Great Britain will be that to make Britain's exports more competitive and more attractive. The risk for Nigeria is that we might end up running a trade deficit with Britain. We mainly export machinery and other capital goods. As for the second part of your question, a weaker pound will not have a direct impact on commodities. What would have a more direct impact on commodities is sentiment. In recent months, sentiment has been very negative because of concerns of an imminent global recession, and those concerns are fairly justified. We have seen this trade war that is very persistent. We're seeing the risk of a no-deal Brexit. We're seeing weaknesses in China, weaknesses in Germany. So because of that, commodities have struggled to make headway in recent weeks, and the outlook is not that positive. What would make commodities, or what would boost commodities if there's a change in sentiment? Let's say a trade agreement is announced between the US and China, or a no deal Brexit is advertised completely. Without that, I don't see commodities making any significant headway, at least for this year.
All right, thank you for your time, Adim Okwesa, Financial Derivatives Company. And Kenya estimates its main season corn harvest from medium potential growing areas will drop by about 25% below the country's 5-year average. Production in the Western and Rift Valley regions is projected at 2.3 million tons after the long rains that fall between March and May. The number of people needing food aid will peak at about 3.08 million by October, just before the onset of the short rain season in some growing areas. The estimate is based on the assumption that the rains will start on time and be sufficient. Reports say the number of food insecure people has risen through the year to 2.6 million, currently from 1.1 million people identified in February. And Zambia's inflation rate has surged to the highest level in almost 3 years, increasing chances that the central bank will continue tightening. Consumer inflation accelerated to 9.3% from 8.8% in July. Prices rose 0.7% in the month. Zambia's central bank may raise interest rates to contain inflation. The central bank governor warned last week that the central bank would raise interest rates again if inflation doesn't return to the target band of 6% to 8%. The Monetary Policy Committee kept the rate on hold after bucking the global trend in May by tightening by 50 basis points. And the Executive Board of the International Monetary Fund has approved a new 3-year extended credit facility arrangement of about $191.9 million for Mali. The IMF's board also endorsed the release of about $27.4 million under the arrangement of its special drawing rights. The new arrangement supports the government's development strategy for strong and inclusive growth through job creation, economic diversification, and greater resilience. The board says Mali, a fragile, low-income country struggling with insurgency, has made significant progress under the previous fund-supported program despite challenging conditions. And a quick update from the Nigerian equities market. Let's talk to Eddie Jong Erwan. Hello, Eddie. Good afternoon. Well, in less than 40 minutes from now, the market will close. Bring us up to speed with what the market is doing at the moment, particularly with the Stanbic IBTC earnings.
Well, hello, Chimi. Well, right now, Stanbic, although they release not so impressive numbers, the company will be paying an interim dividend of 1 naira. Surprisingly, that has not had any impact on the company's share price, as it's still trading at 35 naira, which it closed with yesterday. And we've seen just about 16 deals on that stock so far. So we'll keep our eyes out and our ears on the ground for any development. Another company that's doing well at this time is Zenith Bank. Tier 1 lender Zenith Bank. Earlier in the day, the company notified the Nigerian Stock Exchange shareholders and stakeholders that the payment date for the interim dividend of 30 kobo has been moved from the 2nd of September to the 4th of September. Right now, Chimi, Zenith Bank is up by 1.03% and trading at 18 naira 70 kobo. We've seen about 157 trades so far. The banking index is also up by 0.45%, but that hasn't had any impact on the general index, which is still in the negative territory by 0.25%, so MTN is down, Unilever is down. So those stocks are actually dragging the index down. So let's see how the rest of the day goes, Chimi.
And in your words, let's keep our eyes and our ears on the ground. And we'll leave it at that. Thank you, Eddie. And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwawu.